The ECB stress test results are out, showing a 10 billion euro shortfall still to be raised by 13 banks in the region, including 4 from Italy and 2 from Greece. We have Frank Holmes joining us this morning to talk about this. And of course, Fed and Wednesday, big news there. Frank, thanks so much for joining us.
It's good to be here. Fall is here. I love this weather.
Yes, I love fall as well, Frank. Now let's talk about the news that came out over the weekend. The ECB announcing 25 lenders in the region failed its stress test. The bank's balance sheet data at the end of 2013 showed a total shortfall of 25 billion euros. So, Frank, is Europe in a lot more trouble than we think?
Well, we're really happy as money managers for our European fund. We own none of those banks, and we own the banks that some of them have been popping. So we're really happy this morning's meeting that we were able to dodge those bullets. But on a bigger macro scale, it is important, and I've been trying to advocate that we have the G20, which is more caught up with tax and regulations, and it's very difficult, so they can make money cheap in Europe. They can make it cheap. Negative rates of return, which is good for gold, but it's very hard to get a business loan. There's just so many regulations and rules. So this is another conundrum that's taking place. Cheap money in Europe, but the banks have to put up more capital. They have to put up more capital to make a loan, and then the rules for making a loan. So they're really stuck in that economy, and all they want to do is run around the world and tax everything and everyone.
So, Frank, we saw the signs that Europe is indeed struggling, but is it in a worse shape than originally thought?
I think it's much more worse, but I'll give you a sort of light at the end of the tunnel that I heard about with my CEO event. I was in Rome. Is for the first time an Italian private equity with about $1.2 billion in Milan is investing in Italy because they're going to change the employment laws. And they're going to make it much more easier for young people to get jobs. And right now you have this massive unemployment. So I think that Italy may be the leading indicator to get change taking place through Europe.
And that's also what the Prime Minister of Italy is saying, Frank. Now, let's get to the OT segment, opportunities and threats in the gold market. Let's start, as always, with our opportunities. And bond buying is expected to come to an end this Wednesday at the Fed's monthly policy meeting. The central bank likely to reinforce its stated willingness to wait a long while before hiking interest rates after a volatile month in financial markets that saw some inflation expectations drop. Frank, is this an opportunity here for the gold market? Can gold seize the day?
Well, I think it's most important for the gold investors are the rates negative or positive. And right now we're living with negative real interest rates on the 5-year government bond. If the 10-year government bond yield falls back below 2% and inflation puts its head up to 2%, then all of a sudden you're going to see gold rally. So I think that that's what's key, and I think they'll come out with it. They're going to keep rates low. They're just going to stop the purchases in the open market.
You know, what on earth are we going to speak about now, Frank, with QE gone?
But you know what's really sad, though, Danielle, is they come out with QE 1, 2, and 3, and gold has fallen. If you take a look at $1,900 gold in 2011, it's been nothing but a down spiral. And the biggest thing that we've been able to see in our analysis of this is that money supply is actually shrinking out of Asia, the 7 most populated countries in the world, and Europe. Now, maybe Europe can get its act together, get its money supply, loans being made to get economic engine. That would be more positive for overall commodities.
And continuing with opportunities now, Frank, let's look to India, where it is Diwali, the Festival of Lights. We're seeing gold imports into India rise by roughly 4 times to 95 metric tons compared to 15 to 20 tons that we saw in September of last year. Is this growing demand trend for gold in India here to stay, Frank?
I think that it's very important that Modi has been able to instill the sentiment of confidence. And we've seen that with money flows since he's been elected of Indian investors themselves reinvesting in their economy. His commitment to infrastructure spending. He's come to America. He's come over to build relationships, economic ties. I think it's very strategic, and I think India will continue. And he's also said he's going to make it easier for Indians to be able to buy gold without all the penalties that were being imposed upon for 2 years now. And we're seeing that. And we're seeing this, witnessing a 400% increase in gold consumption, getting back to where it was, sort of normalizing it.
So a classic example of government policy really fueling gold demand, Frank.
It's so important. Government policy is a precursor to changes in all of our prospectuses for a reason, and it's important to follow that. And that's basically a fiscal policy of deregulation.
Okay, on to threats now, Frank. And PMI, U.S. monthly PMI hit a 3-month low. Numbers coming out this morning. Frank, I know offline you were saying this is a threat for you.
Well, especially China. And this is where we have this unsynchronized growth that's impacting all commodities. So Europe's PMIs are negative. America was positive. It's now turned negative, where the 1 month is below the 3 months. And China's turned positive. So there's no point where we've had all three major economic forces of the world aligned. And that creates a schism in commodity demand.
Okay, Frank, let's wrap up with the gold's touchdown pass of the week. Is it going to be the Fed?
I think it's going to be the Fed, and I think that it'll basically give some people an idea of where things are going, and everyone will be waiting for that event. GDP comes out also this week, but that's a past event. Remember, for your listeners, PMI is the future. It's forecasting expectations of services needed, capital expenditures needed over the next 6 months, and that's an important idea of where the economy is going.
Frank, as always, thank you so much to our Monday morning quarterback, Frank Holmes of U.S. Global Investors. We'll see you next week.
All right, take care. Bye.
And thanks for watching this edition of Gold Game Film with Frank Holmes. We want to hear from you. Email us at newsfeedback@kitco.com. We'll see you tomorrow.